Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the financial statements of companies and try to figure out if they're cooking the books or if it's just a really bad quarter. This week we're decoding CoreWeave's recent SEC filing, and let me tell you, it's a doozy. We're talking about a potential merger with Core Scientific that could shake up the AI infrastructure world. So what's the big story here? CoreWeave wants to buy Core Scientific, and this filing is essentially the invitation to Core Scientific shareholders to approve this mega deal. CoreWeave, if you don't know them, is a massive player in AI cloud infrastructure. Think of them as the powerhouse behind the AI revolution, providing the supercomputers that train and run all these fancy AI models. Core Scientific, on the other hand, is in the data center business. They provide the physical spaces and power for these high-tech operations. CoreWeave is offering to buy Core Scientific in an all-stock deal. For every share of Core Scientific, shareholders will get about 0.1235 shares of CoreWeave. Now, this is where things get interesting because the value of that deal depends on how CoreWeave stock is doing. Let's look at the numbers. Back in June, before the news of this deal broke, Core Scientific stock was trading around 12 August 30. CoreWeave stock was roughly 155 Wees. Stock was roughly $139.30. CoreWeave stock had climbed to 16.5 values per. CoreWeave stock can go up or down, so the final payout for Core Scientific shareholders isn't set in stone, to suggest that the market is already pricing in a lot of this deal. The implied value per share of Core Scientific was around $22.40, representing a pretty nice premium for Core Scientific shareholders isn't set in stone. Why do they want to do this deal? CoreWeave says it's about creating sustainable long-term value. They see a big benefit in combining Core Scientific's data center infrastructure with their own platform. They want to control more of the physical infrastructure, which they call verticalizing their operations. This could mean better efficiency, cost savings, and more control over power and expansion. Plus, CoreWeave has a massive need for power to run all those AI chips. Core Scientific has a significant power footprint, and acquiring them could solve some of those needs. It's like they're building the ultimate AI data factory. Now let's dig into the risks. Both companies are laying out a lot of potential problems. For CoreWeave, there's the risk that their recent growth might not continue. Competition is fierce in the AI cloud space, and they're up against giants like Amazon, Google, and Microsoft. They also rely on a few key suppliers for crucial components like NVIDIA GPUs, and any disruption there could really hurt them. Plus, all that debt they've taken on is a big factor. Over 11 billion JRs in debt as of June. That's a lot of interest payments, and it could limit their ability to make future investments. Then there are the risks for Core Scientific shareholders if they accept this deal. The biggest one is that the value of the deal is tied to CoreWeave stock price. If CoreWeave stock tanks, the value of the deal for Core Scientific shareholders goes down too. There's also the risk of dilution for existing CoreWeave shareholders. CoreWeave is issuing a lot of new stock for this acquisition, which could spread the ownership pie thinner, and let's not forget about that multi-class stock structure CoreWeave has. Their Class B stock has 10 votes per share, and their co-founders control a significant chunk of that, meaning they have a lot of voting power. This could limit the influence of new shareholders, including those coming from Core Scientific. Now let's talk about the money. CoreWeave is the clear acquirer here, and their financials show some explosive growth. For the 6 months ending June 30, 2025, their revenue was a staggering $2.2 billion, which is a 276% increase from the same period last year. That's massive growth, but it's also come in with massive costs. Their technology and infrastructure expenses, which are essentially the cost of running all those data centers and GPUs, also shot up by 347% to $1.2 billion annual for the same period. Also say period back parity for the same period 2025, their revenue was a staggering 220 to 26 Argentines from the same period last year. That's massive growth, but it's also coming with massive costs. Their technology and infrastructure expenses, which are essentially the cost of running all those data centers and GPUs, also shot up by 347% to 1.2 billion for the same period. Their general and administrative expenses also surged by 832% to $349 million, largely due to hiring more people and those ever-present stock-based compensation expenses. They're basically spending a fortune to fuel this rapid expansion. But here's a key number. Their interest expense jumped by almost 400% to $500 debt they've taken on. Let's compare that to Core Scientific. Their financials paint a different picture. For the year 2024, their revenue was around $1.9 billion, which is a huge jump from just $229 million in 23, but they're still operating at a loss. Their total operating expenses for 2024 wiped out those gains, and their interest expense for 2024 was a whopping $300 billion. Their operating income was a positive 324, wiped out those gains, and their interest expense for 2024 was a whopping $361 million. At $2024 million had total operating expenses for 2024, wiped out those gains, and their interest expense for 2024 was a whopping $59 billion debt load, though not as extreme as CoreWeave. And with all this debt, these companies are constantly looking for more capital. CoreWeave's IPO in March 2025 raised $1.4 billion, and they've also secured billions more in debt financing. This relentless pursuit of capital is necessary to build out the AI infrastructure required, but it also amplifies those risks associated with debt. Looking at the combined pro forma balance sheet as of June 30, 2025, it's quite a picture. CoreWeave's historical assets sit at about $26 billion, while Core Scientific's are around $2 billion. After accounting for the deal, the combined entity has assets over $3 at the CEV, and toting for the deal, the combined entity has assets over $35 billion, the assumed debt from Core Scientific. And the goodwill, that's over $53 billion, showing how much CoreWeave is paying for the potential future growth and synergies. We also get to see some potentially interesting numbers in the opinion of Core Scientific's financial advisors. Moelis and PJT Partners valued Core Scientific's colocation business alone between $3.6 and $22 billion, and it's a huge range. And it shows how much uncertainty there is in forecasting these future revenues. For CoreWeave, their standalone DCF analysis suggests a valuation between $1.10 and $1 and $5 billion. That's a huge range, and it shows how much uncertainty there is in forecasting these future revenues. For CoreWeave, the standalone DCF analysis suggests a valuation between $129, and it's a huge range. And it shows how much uncertainty there is in forecasting these future revenues. For CoreWeave, their standalone DCF analysis suggests a valuation between $49 and $281, it suggests, and $5.2 billion per share. This range is quite wide, reflecting the rapid and somewhat unpredictable nature of the AI market. Now, for my take, CoreWeave is clearly on a rocket ship, but that rocket is burning a lot of fuel and debt. Their strategy of purpose-built AI infrastructure and aggressive expansion is smart in this booming market, but the sheer scale of their debt and the integration risks with Core Scientific are substantial. CoreWeave is betting big on the future of AI, aiming to control more of the physical and software layers. They're also investing massively in future power capacity and streamlining their supply chain. The risks for Core Scientific shareholders are also obvious. They're getting CoreWeave stock, whose value depends on CoreWeave's continued execution and the broader market trends. The management of CoreWeave holds most of the voting power due to their multiple share classes. This means minority shareholders, including former Core Scientific shareholders, might have limited influence. The executive compensation section is also worth noting. The named executive officers could receive significant payouts in the event of termination after the merger, including substantial severance and accelerated equity awards. For Adam Sullivan, the CEO of Core Scientific, these potential payments could be over $31 million. That's a nice payday, if the deal goes through and things play out as planned. So what's the bottom line? The deal looks like it provides a good initial payday for Core Scientific shareholders, but the long-term value hinges on CoreWeave's ability to execute its ambitious growth plans and manage its immense debt. It's a high-stakes play in a high-growth, high-risk industry. Alright, that's our deep dive into CoreWeave and Core Scientific's merger. What's your take on this deal? Will CoreWeave's aggressive strategy pay off, or will the debt and integration challenges prove too much? Let us know your thoughts in the comments below. If you found this breakdown helpful, give this video a thumbs up and subscribe to Corporate Decoder for more insights into the world of business and finance. And don't forget to join our Discord community linked in the description for more discussions like this. Thanks for watching, and we'll see you next time.